Yeah, so I've got the figures. I haven't actually listened to the earnings call yet, although I have scanned the transcript, so I've got 1 point on that. But I'll go through the figures and then I'll pass over to Paul. So this is fourth quarter and I think full year as well. So Q4 net sales was 6.4 billion euros with a gross margin of 51.5%, leading to net income of 1.8 billion euros. Quarterly net bookings in Q4 was 6.3 billion euros, of which 3.4 billion is the newer model. 2022 net sales of 21.2 billion, gross margin of 50.5%, net income of 5.6 billion. So lots of that getting to the bottom line. ASML gave guidance. They thought net sales were going to grow about 25% compared to 2022. So still strong.
Big story.
Expects Q1 2023 net sales between 6.1 billion and 6.5 billion. They think gross margin will be between 49 and 50. And the value of fast shipments, this is something we've spoke of before. Basically, they ship the product before testing it and test it actually in situ, because there's no point testing something, it breaking in transit, and then you having to repair it anyway. They reckon that's going to be around 3.1 billion in 2023. And their dividend, Paul, if you're interested in that, €5.80 per share. It's about 5.5% increase.
Yeah, 5%.
Yeah, 5.5%. So yeah, all looked really, really good to me. Nothing. I mean, I wasn't expecting the bookings to grow at that kind of pace. I thought, well, from what you hear in all the other earnings calls of the semis, I was expecting bookings to have fallen. They haven't fallen. ASML looks really, really strong. What was in the earnings call?
Incredible. Well, I think I messaged you guys, didn't I? I said, this doesn't feel like a normal earnings call. It feels more like a podcast, because the questions were less on, how are we going to see the margin growth? How are we going to do and a lot about the numbers. Are we seeing strong growth in EUV compared to DUV and all that? Those weren't the questions, which was really, really interesting, because that means that analysts just believe that this thing is going to continue grow at whatever pace that ASML say. Good things and bad things in there, but there was a lot more about the politics, because everyone's very interested. In case anybody doesn't know, ASML is kind of officially banned by the Dutch government through the US government, who also through the EU government have basically banned ASML from selling their top line product, the EUV product, to China. China makes up 15% of its sales. They still sell the DUV product and metrology. Metrology is the measurements of the wafers. They still get to sell that, and 15% of, I think it's their revenue, comes from China still. So they're still making a big load, but China isn't allowed any of the top line EUV products. Everyone seems to believe that's because of military use, but that's, somebody said, the CEO said, Peter Winning, I can't remember his name. I'll just call him Peter Winning, because that's what his company seems to do. He got rid of this whole military hardware type thing. He said, look, the top chips aren't in military hardware. They need to be more robust. They need to last longer, and they don't necessarily need to be as fast. What they're trying to stop is cyber wars and 5G and AI in China from developing from these big EUV things. So I've got lots of notes that came out from this, and I thought it was really, really interesting. He was very keen to say that his business is not political. They deal in their business and not politics. They go over to educate politicians on semiconductors, because he says 10 years ago politicians didn't have a clue what semiconductors were, and I think he compared it to the oil rush in the 80s, 70s and 80s, and the idea was that this oil thing was getting bigger and it was always going to be there. It was very abundant, but then it started getting a bit smaller. Emerging markets started to find oil, and all of a sudden it became very political and very threatening. And that is, he says, that's what they're seeing now. They're seeing the growth of semiconductors as a political football and getting very protective over it. And he says we just have to live within the means, but this is the trend of semiconductors now. And he says it's that important. It's as important as oil. So I mean, that if that's not an investable case, I don't know what is really. I've got down here, expects 25% increase in sales by the second half. So he sees demand increasing, and this is from information they're getting basically on new customers. They've got new customers coming in and customers doubling up on orders because they want to get in the queue. So the queue is that long. They're buying again to get at the back of the queue again. And he says they have a system where if a customer's moving too slowly or not paying quick enough, or they decide to pull out for whatever reason, they just pick up that EUV system and move it on to the next one. And the next customer picks it up in whatever shape it is, they will take it from there. And he says, we don't care about that. If a customer's messing us around, we'll just move on to the next one. There's plenty. And that was a big thing as well, signifying the demand. I thought this was, it was a very educational podcast style earnings call, which was very interesting. And I thought, and to me, valuation is high, justifiably. I took a quick look at the valuation earlier for ASML, and it doesn't look good at this price to buy. Unfortunately, I bought last week, which I was very lucky to buy last week. This high, you've not got that margin of safety on it, but it's still it's an oil company. That's the way I see it now. It looks like an oil company, and that's what oil companies did through the 70s and 80s, mate.
One of the phrases that I have pulled out that from the transcript I read was when Inc was asked, is he worried about the expectation, the recession having a major impact on on their bookings, so their future orders or future deliveries? And his response was like assured confidence. He said, the expectation of the duration of a potential recession in the minds of our customers is much, much shorter than the average lead time of one of our machines. The order backlog will protect our income statement. And that's kind of it, isn't it? Because even the worst predictions are a short, sharp recession. And ASML here has, 60 billion in backlog now? So that's kind of 3 years of revenue, just under 3 years of secured revenue. So I don't think it's in any trouble at the moment. I think it's looking like a very healthy business, doing very, very well.
They're hiring as well. They're one of the few companies that are hiring and not laying off. So there's another thing as well.
Steve, why have you never bought it?
Don't know, to be honest. Mostly because of price, I think. Mostly because of, I've expressed before, a little bit of a fear of not quite understanding semiconductors well enough that I feel like I'm not just using words because those are the words that I read. But I just had a quick look, and it looks like it kind of meets pretty much everything I'd look for in a growth stock. And I don't really like that term. I don't think stocks kind of intrinsically are born into the growth family or the value family or anything else.
True value investor.
But it has pretty much all the things I described when I was talking about Chevron and ways that your company can grow, right? It's got, as you pointed out, aiming at 25% growth or coming through. I'm looking at its kind of recent history over the last 5 years, and the faster it grows, the faster its margin grows, which makes it kind of more cash generative. Its dividend has gone up, not in a straight line necessarily, but up in general, and its shares have come down, not necessarily in a straight line, but down in general. So it does most of the things you would expect to kind of drive a growth stock along here. So if anyone feels that they did know this well enough, I kind of wouldn't blame them buying it at these prices. Steve, what is the price of the thing behind you?
I think when it flicks over to it, I think it's about €600 at the moment. But Paul, you buy the dollar, that'll be about $700, will it?
It's 684. Just checking very quickly. 684 as of close today. So it's getting close, pushing it. I think it's too much. I think we're not thinking of. At this point, we're not thinking, is ASML's share price going to go down over the long term? And is it going to go to zero? We're not thinking of it like that. We're thinking of the possible rate of return that comes from it. And for me personally, I think very long term, I think of the dividend growth here. I think of they're going to continue to pay back to shareholders in this sense. And I didn't actually check for a share buyback program. I don't even look for those things in ASML at all. I just want to know about their backlog. I want to know about their what the a little bit about the politics, but not too much, because they clearly can make money without needing China. But yeah, I think you're right. I think it's just a little bit too much to buy here for the possible rate of return going ahead. I think there's much more on the market that you can buy here.
It depends, doesn't it? Because you've got to be careful with this revenue growth, because 25% is fine. If that happens in perpetuity, you're absolutely quids in here. But this is a manufacturing company, and the more that they get 25% of sales in, the more they're going to have to spend on manufacturing. And whilst they do that currently at a very good margin, there is the same risks that we had in Amazon overbuilding that you would have in ASML overbuilding should that growth rate ever slip back. So it's about how you think about its revenue growth going on. 25% in perpetuity, you think, 25 to 20 or whatever, you're going to do really, really well out of this. If it falls 25 to 10, it might be a different story in terms of valuation.